Welcome to this fingraphs.com market overview in partnership with Dukascopy TV. Last week we saw further easing from the European Central Bank as well as from the People Bank of China. Equity markets rallied and the dollar with them. This week we will be awaiting the Fed meeting on Wednesday, as well as on Friday the Bank of Japan, as well as preliminary US GDP figures for the third quarter. We will look at euro dollar today, dollar yen, gold, and the S&P futures. As you can see, a strong rally on the dollar, a strong move down on the euro, a strong rally on dollar yen, a slight consolidation on gold, and a strong rally on equity markets. Let's start with the euro dollar. This is an investor's view. It's a combination of three time frames. A long-term time frame with a weekly update for the perspective over the next few quarters. A daily update, one update per day for the perspective over the next few months. And finally, a short-term hourly update, one update per hour for the perspective over the next few weeks. The summary market positioning bell box tells us that we are in a potential resume downtrend in a pullback period. We have a long-term downtrend, we have a pullback period, and the short term is moving down again. Looking at it in more details, we look at the long-term chart, the weekly chart, still has some potential down, probably towards parity over the next few quarters. The daily chart, which had been correcting up, has reached its targets, with the message here telling us corrective up done. It may be ready to resume its downtrend. The short-term chart is confirming this position and is now in an impulsive move down and could lead us over the next few weeks down below 110 and possibly down to 108.31. Going on to the yen, we have a similar situation. The long-term trend, the weekly chart, is still heading up. The daily medium-term chart is still in a downtrend, and the short-term hourly chart is accelerating up again. Hence the message, potential resume uptrend in a consolidation period. Targets over the long term are possibly up to the 130 level in what we call very extended targets, impulsive 2 targets. Short-term or medium-term, our daily chart is still correcting down. It hasn't really reached its targets, but the risk index is still quite low, so it may resume the uptrend from this point. The short-term trend is now heading up quite aggressively, and over the next few weeks would have the potential to move back above 121, back to possibly above 122. Now looking at gold, it did correct a bit along with the euro last week, but the move wasn't as strong. It remained corrective, not impulsive. You could see this on this hourly chart. The general picture is one of a weekly chart which is still heading lower, so the long-term downtrend. The daily chart still correcting up and has pretty much reached its targets. There's a strong resistance around the 1200 level, and as long as we stay below it, we believe it's only a correction. And then on the hourly charts, we've been correcting down to this corrective zone. As long as we stay above 1140, we should see some support. That summarizes into a potential resume downtrend in a pullback period. So we have a long-term bear, a medium-term bull, and a short-term bear again. Now looking at equity markets have seen quite a rally last week. The long-term trend, the weekly chart, is still heading up. The daily chart had corrected very strongly over the last few months, but has since rebounded quite aggressively and is now in a neutral position. You do see a bear trend here, but you don't have any targets anymore. And so in this respect, it's probably ready to resume its uptrend. And the hourly is leading this way up with a bull trend, which possibly has pretty much now reached its targets. We would probably expect a bit of consolidation this week until it moves higher again over the next few weeks. And that's it for this week. Thank you very much.